Hey there, Matt the Mortgage Guy, recording a quick video talking about one of the biggest mistakes people make with their mortgage. Now, before I get into it, if you like mortgage stuff, if you like this video, please smash the like button for the YouTube algorithm. Trying to make 2 videos a week, get out as much good info as I can to people out there on the interwebs. Consider subscribing. And without further ado, into the video, something I was thinking about lately, because I have a lot of conversations, and I like to think of myself as a mortgage advisor, as an independent broker, more of a debt manager. So you've got your asset manager, your financial advisor, who's advising you on your assets. You've got a mortgage advisor who's advising you on debt. And your biggest debt for most people is your mortgage. So it's important how you structure it, how you pay it, and things like that. I get into all kinds of conversations where asking people about their goals, how soon do you want to have it paid off? What are you looking to do? What other debts do you have? And kind of helping them manage those. And so a common mistake that I see, and I just wanted to point out in this video, especially now that rates are super low, is that people are aggressively paying off their mortgages because that's important to them, and I understand why, but while neglecting other financial goals, whether that be putting money into retirement, whether that be paying off high interest credit card debt. And let's face it, if you've got $50,000, $60,000, $80,000 in credit card debt, and your extra $500, $750, $1,000 per month is going towards your mortgage, you're doing it wrong. You know, you've got mortgage rates that are sub 3% on a 30-year fixed. And that interest you're paying, if it's your primary residence, you're writing it off on your taxes. Why in the world would you throw extra money at that while you're paying 10, 12, 15, 18% interest on a credit card? It doesn't make sense. And similarly, if you're waiting for a future date to start investing in your retirement, to start investing in things that are gonna help you retire early or retire comfortably or whatever it is, and you're neglecting that by paying extra money towards a mortgage that's a 2.75% or something ridiculously low like that, I think that is also a mistake. And so the lesson here, the advice here is look at it as a whole and have a game plan to where you're not just doing something because you got an idea in your head one day that if I throw $400 extra towards the mortgage, I'll get it paid off in 18 years. So I want to do that. That's a great idea. And I like going through those numbers with people, trying to figure out, hey, if I throw X at it, I'll have it paid off in 18 years. If I throw Y at it, I'll have it paid off in 12 years. And that's cool to think about it, but not at the expense of other stuff, right? And so mortgage, the biggest debt, a really important thing to consider how to structure and how to pay off, but it's part of a collection of debts. And it's part of a bigger game plan and strategy. Any questions at all? Sorry, it's been a long day. It's warm in Sacramento. So please feel free to reach out. Thanks for watching. Hopefully I'm providing value and helping people out. Best way to get a hold of me, matt@mattthemortgageguy.com. Shoot an email over. Me and my team will get back to you and hopefully help you out. If you're in California, I'd love to help you. If you're out of state, I'd love to send you a referral to an out-of-state broker in my network that I like and trust. All right, have a good day. Thanks for watching.